Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Monday, January the 28th, 2008. The headlines out of Switzerland this morning read as dollar rose on Friday, helped by fading chance for another strong rate cut at this week's Fed meeting. The dollar rose on Friday as investors scaled back bets for another aggressive Federal Reserve interest rate cut this week, and on optimism that a $150 billion stimulus package would help support the U.S. economy. However, concerns about an extensive fall in U.S. equities gave some support to the Japanese currency, which was up against the dollar. U.S. stocks extended losses, and the safe haven Treasury bond prices rose, reflecting considerable uncertainty about the near-term outlook. The Fed's emergency 75 basis point rate cut last Tuesday, precipitated by sharp falls in global stocks, prompted investors to price in a 50 basis point reduction from the U.S. Central Bank at this week's scheduled policy meeting. Losses in the European stock markets on Thursday and earlier on Friday were largely linked to fallout from a trader scandal at the French bank Sogin. U.S. rates futures suggest a 76% chance of a 50 basis point reduction in the Fed's fund rate targeted to 3% at the Fed's meeting on January the 29th and 30th. Since there is a delay in the news, which is published in Switzerland earlier in the morning, I would suggest for any prices that are quoted here that you check your current charts and also check your technicals to make sure that the prices are correct, or at least within a good range. With that said, the euro dropped down to 46.11, which was down approximately 62%. It's now trading around 47.8991, so I would be cautious that it might be testing the centennial level at 4,800. Tracking the slides in the equities, the dollar-yen slid to an intraday low of 106.73, which was down around 41%, still trading in that range. Dollar Swissy traded up 91% to 109.67, not far from its intraday high of 109.90, but is currently trading about 108.90s, close to a centennial level. Euro pound dropped approximately 88% to 74.03, but is currently trading around 74.54. With the European Central Bank's interest rate at 4%, and the monetary authorities maintaining their hawkish inflation rhetoric, an aggressive Fed easing would further undermine the dollar's yield appeal against the euro. Weaker than expected consumer inflation data held the Canadian dollar down against the greenback, as it backed expectations of a rate cut from the Bank of Canada. The dollar loonie was down approximately 187%, off a session peak of 102.57. A heavy economic calendar awaits investors this week, including the January non-farm payrolls, which could decide the direction of the recession debate. Taking a closer look at the Asian session, the Asian stocks were lowered today. Risk aversion continued to be the theme in the Asian session, with the yen and the Swissy as the biggest gainers against the dollar. The markets will be intensely watching the performance of the Asian stock markets as a barometer of what is to come in the days ahead. Friday saw the U.S. equity market slip as concerns over further credit losses among banks grew. Over the weekend, a UK newspaper, The Times, quoted Japan's Financial Service Minister Watanabe as stating that a team was mapping out the operation of the Japanese SWF. Though much is still unknown regarding the behavior of this fund, it should initially focus on domestic stocks. There was a thin economic calendar today. In the Eurozone, the M3 growth for December should have eased slightly from its highest point in 30 years in November. The numbers preceding were 12.3%, which they also expected to remain the same, but numbers actually came out at 11.5%. The U.S. new home sales were expected to stabilize in December. The numbers they were predicting were 645,000, Unfortunately, it dipped down to 604,000. We are still waiting for the IMF release of its global GDP estimates, which were delayed last week due to market turmoil. The IMF already announced that the revisions will be down in each of the years from 2002 to 2007 based on PPI exchange rates. That concludes our news for today. We would like to invite you to join us at our website, www.succeedinforex.com. There you will find links to our Yahoo forum, which is also succeedinforex.com. We'd like to invite you to join us there also. Hope you've had a great trading day and continue to have a great trading week. Thank you for viewing, and we will see you tomorrow.